Hello and welcome to another episode of ET Markets webinar where we bring you front row insights from the biggest minds in investing. Well, I'm your host, Shitajananda, and today we are diving into the theme that matters to every long-term investor, future-proof investing, and how Motilal Oswal's funds are built for all seasons. Well, joining us today is someone who has seen the mutual fund industry evolve firsthand. Please welcome Prateek Agrawal, Managing Director and CEO of Motilal Oswal Asset Management Company. In fact, the AUM of the Motilal Oswal AMC has crossed 1.5 lakh crore recently. Prateek, it's always a pleasure to have you with us.
Thank you so much.
Thank you so much for taking the time out, Prateek. Well, let's start with the big picture. How would you define the role of Motilal Oswal AMC has played in shaping India's mutual fund growth story over the past decade?
We are a young AMC, and being young, you learn from people who have been there before and have done it all. So we did that. But at the same time, we have a few firsts to our credit. Focused high conviction investing, which we think is a very, very premium portfolio construct, is something that you see across our house. Philosophy of QGLP that Ramdevji brought to the world in early 2000s is something that the funds adhere to, and outcomes have been nice. First time products like NASDAQ fund and then an S&P 500. So some of the firsts in the industry have been from Sable. I wasn't here, Ramdevji, Naveen, Ashish Somaya, now he is somewhere else, all piloted, shaped the firm over several years. And on top of that, this is one house which is very unique in alignment of interest. So, we chose to do only equity. So it's not like we are hedging our bets, and also lot of the firm's monies are invested in our own funds. So, and the quantums are staggering. So while we have crossed 150, out of that, over 8,000 crores may be house money. So house aligns the interest of itself with the investors completely. So again, we are very, very unique.
Absolutely. And in fact, the industry has grown rapidly in the past decade or so, and Motilal Oswal AMC's portfolio grew by 15 lakh crore to 72 lakh crores today. What do you believe, drove this extraordinary investor trust?
No, what is this 15 lakh crore to 72 lakh crore?
I mean, what I'm saying is that the AMC folios have grown rapidly in the past few years.
Yes. No, so in our industry, investors track performances very closely.
Yeah.
With the grace of God, as luck would have it, our funds have been topping the charts for a decent amount of time as we speak. And it is not one or two funds, it is most of our funds in the house. Now that is something that investors have definitely caught on to. And in this period, when we have seen very strong investor traction to come into the market, and increasingly directly through online channels, we have seen a very strong traction. In a few months of the newer investors in the market, our market shares were very high. I am told they could have been in the vicinity of 40% in terms of number of investors being brought to the market, not the amount. That is how it is. And while performance may be the first thing that makes people look at us, What
Right.
we are also trying to do at the same time, and I will just do it now, is to try and explain what we are doing, so that investors join us for the right reason, and the journey going forward is a happy one.
Yeah.
So just understand this: we run funds which are focused, high conviction. That is one, but at the
Right.
same time are very different from the index. So in our parlance, we call it tracking error. Tracking error of our funds, if you see, would be in excess of 80%. Some of them may be in excess of 90%. So away from the index positioning, focused on some of the highest growth spaces in the economy and the markets, with the philosophy that markets ultimately will follow earnings growth. Now, that construct, this positioning, has resulted in us looking whatever we are, but it can change. It can change. So we are not somebody that you should think is a consistent, close to index performer. Our performances in one part would be very different, maybe on the positive side. On the other part can be different on the other side. So one has to be ready for volatility, for good long period outcomes. Else we say we have a huge platter of passives. For people who seek consistent performance, can choose passives. Okay, the whole thought is if you want close to index performance, which is what people say is consistent performance, two funds, you will average index, paying active management fees, you will be significantly below index. Passive funds are a cheaper way of attaining the same goals. For actively managed funds, we think our constructs are very different. Understand us for what we do right. Come to us for growth. If you can digest volatility, we are good for you. If you want lesser volatility, then you can pair us with the best of value style of investing.
Sure.
So that is our communication. We see ourselves very unique in that respect also. As India's growth in earnings focused manager.
Absolutely. In fact, yes, returns is one thing, but definitely there's a lot of trust in Motilal Oswal. That's also something which is pulling a lot of investors into the AMC. Now, the tagline, Prateek, high quality, high growth, is very powerful. So how do you ensure this promise is consistently delivered through fund selection and portfolio management?
Yeah. No, so I think it comes from the QGLP philosophy of the house and a very powerful message that ultimately markets follow earnings growth.
Right.
Ultimately, markets are, stock price is nothing but the value of a business. Value of the business increases if the business grows. In sales, yes, more in profits, even better in cash flows. And if it does that over a long period of time, clearly the value of the business has increased and the market shall reflect the same, and our investors make money. So that's the very simple thought. Now, here, what we really need is a very large quantum of growth. So index earnings growth could be, when you build a thesis, let's take it at 10 to 12%. If you have to have good outcomes for the clients, the delta in earnings growth has to be large to account for fees, errors, omissions, and alpha. Now let's take a start point which is higher. So let's take a number, 20% instead of a 12%. Let's start at 20%.
20%.
And think about it. It is not 1 year growth; it is multi-year growth.
Right.
Okay, so what we do as a team is to sit together and flesh out narrow spaces in the market which will afford the same. Okay, so we are a young house. We are a medium-sized house. Our funds are small, and it is possible for us to position ourselves in the nooks and corners of the market, which offers this kind of growth. As you get larger, the largest funds, since growth is in niches, largest funds will find it very difficult to do the same, even if they want to. Now, for example, we also say this is time for alpha.
Right.
Alpha would be created in the same thought market follows earnings growth. If you are able to spot many spaces which can grow earnings at a large delta to index and for several years.
Yeah.
Right. Large growth for several years. So like software did in 90s, like private sector banks did from early 2000s till recently, and so on. So this is time for alpha because more recently, spaces like electronic manufacturing, renewables, new tech, capital markets, luxury, etc. have all happened, and of course, China plus one thought getting into manufacturing, etc. have all happened at the same time, giving us the combo of high growth and longevity. Now, these spaces are all fleshed out by our managers sitting together. And if you see the construct of our fund, whichever one you want to look at, where there is flexibility to move away, so X of a large cap fund where 80% have to be from the top 100, you will find us to be light on spaces which do less growth than the threshold we set. So very little, nothing on staples, nothing on large cap IT, nothing on commodities, nothing on ICE vehicles, very little on financials and so on. And the monies found, you will find, has gone into these newer emerging spaces. So that is what we have been doing. And trying to communicate that, guys, this is very far from the index construct.
Right.
Over a period of time, if markets follow earnings growth, which is what we believe would happen, outcomes would be good, but journey would be volatile. So don't expect, close to index numbers from us for any period. We're not built for that.
Absolutely. And in fact, the idea is that the focus should be on alpha, and a lot of the companies where Motilal is investing is into high growth sectors. But you've touched on one point. So do you want to add, are there any more core principles that guide your fund managers in identifying high quality and high growth companies?
No, so once these spaces are identified, we encourage managers to include all of them, most of them in their portfolios as to the extent possible. So now look at the market, what are we trying to do? If market works and value as a style is working well, the best of the value managers shall do well, that part of the client's portfolio will do well. If growth as a style comes into focus, and we think it is time for growth now, we must work. And how we ensure that we must work is by having all spaces which affords the kind of growth that we are seeking. With the thought that, in the market, not everything works at the same time. Sometimes one theme works, sometimes the next, sometimes something else. If you have the best of those names, according to whatever the manager thinks, then that part of the portfolio would be talking in that period. And ultimately, when the time, so every manager will love one space a bit more than the others and so on. When the time for that manager's favorite space comes, he will look very good. So this is basically what the thought process is behind everything that we do, and has resulted in a lot of our funds, if not all of our funds, looking good.
Absolutely. If you also talk about the large and the mid cap fund, although it might be a newly launched fund, but how strategy will help in mitigating global macro uncertainty while delivering growth? You can also take us through the recent performance as well, Prateek.
No, yeah, so large and mid cap fund is over 5 years old. Multi cap is something that we launched recently. Is a year-old fund.
Mhm.
And flexi cap, we have it's a 10-year-old fund.
All right.
Now,
Right.
in an LMC fund and in others, I spoke of growth. Now, a lot of these spaces in which you are seeking strong growth, seeing strong growth, are driven by
Mm.
domestic policy tailwinds,
Okay.
and then tend to be very domestic. So, if you are looking at even electronic manufacturing, the
Uh-huh.
part which is listed in the market today is satisfying domestic demand only.
Okay.
For the next 2 years, that's how it is going to be, or maybe global demand, which is X of US.
Mm. Mm.
Names which may be catering to the US have not given any significant business to listed players.
Okay.
That
Okay.
ecosystem for, let's say, an Apple is outside of the listed space.
All right.
So, very, very focused on domestic. If you're looking at renewables, hardly any overseas exposure. Yes, some bit of chemical companies, some bit of cables may be exported, and there is an
Mm.
export exposure. But otherwise, new tech is fully Indian. Services, we have seen our companies being able to negotiate the markets while it is good
Right.
or bad. So in good times, more discretionary spend happen, and bad times, cost
Sure.
takeout deals happen, and so on. So they have been able to navigate. So if
Mm.
you look at our portfolios,
Mm.
7-8% at max may be linked of any one portfolio may be linked to the US, not much.
Ah. Okay.
So we limit that. We
Mm.
limit that, and that is our way of ensuring that the global stuff doesn't influence us too much.
Right.
We believe India is the fastest growing economy, as every trillion happens quicker than the trillion before.
Right.
It will be spearheaded by newer spaces.
Sure.
We think a lot of these newer spaces is where one needs to be focused on for good
Mm.
outcomes for investors.
Absolutely. And in fact, you talked about FlexiCap Fund. It is, I think, it has ranked number one in the category. If you can also throw up the recent performance of the fund, Prateek.
No, so all of our funds, FlexiCap is ranked one now for 3 years, if I remember right.
Sure.
LMC is ranked one for all periods of its
Mm.
existence, 1, 2, 3, 5 since inception. It's ranked one. Multi-cap has had a stellar performance. I think in its
Right.
category, it again tops with a large alpha.
Sure.
So we have been saying it that this is time for alpha. Our
Mm.
funds reflect the thoughts, and happily, the stars have
Mm.
aligned, and we have generated a lot of alpha. So I think today our investors are happy.
Right.
But that said, this is the time to, yes, one, acknowledge them,
Mm.
thank them, but at the same time also tell them that this is what we are doing, this is how we have done it,
Mm.
and what to expect for the future. Now, that said, we do believe the time for growth
Mm.
investing has come.
Mm.
We did well when it was time for value, actually.
Right.
Now, with lower inflation,
Mm.
lower interest rates. RBI cut rates by 50 bips.
Right.
With
Right.
DXY index now at around 97, lowest in I
Mm.
think 3.5, 4 years. Oil being low, inflation being low, outlook
Mm.
on interest rates being, they may fall more,
Right.
etc. I think growth investing
Mm.
should find more traction as we go forward.
Right. Absolutely. Growth investing will find more traction. That's the message coming from Prateek. Right. Let me also get your view on the future. So as India moves towards say $5 trillion economy, how do you see equity mutual funds evolve in the next 5 to 7 odd years?
No, so we think equities as an asset class is having very low penetration in India. It is below 5%.
Right.
Okay, now as India grows, what happens is the per capita income of our population grows, and it converts a country of savers into a country of investors. That journey has started. It will only accelerate as we go forward. And while it is happening, one should expect to see growth in mutual fund industry. I mean, let's say industry advised industry to be significantly faster than the growth of the economy itself. We really think that is how it is going to be, and we are very positive on the outlook. This is just the beginning. Very recently, I was recounting somebody in even in early 2000s. The size of today's largest mutual funds were few hundred crores, not even 1,000 crores.
Right.
Okay, and I think what we have seen over past 20, 23 years, we will see a higher percentage growth over the next similar period. Both a combination of flows and market performance.
Absolutely. And what's the next chapter for Motilal Oswal AMC as you position yourself as the growth managers?
No, so we have done quite a bit over the past period. So earlier we had just about 5 funds, and that is what we were focused on. Now, if you see, we have covered a large part of the product platter, all growth focused, by the way. So a lot of the growth themes that we spoke of, are now available as a passive if the number of stocks in this space is lesser, for example, or both active and passive if we think there is a way to beat the index by managing money actively. Okay, and our thought is that we enable the end investor to think like us and build their own portfolio through some of these sectoral thematics and so on. It is just so easy to think themes for growth and build your own portfolio. You can probably do it cheaper. So all of that we have done. Now it's not only on the mutual fund side, it is also on the alternate side. So we are one of the largest alternate players in the country. As we speak, with an AUM of over 33,000 crore, out of 150 total. The idea is to grow that strongly. Our alternate products are very unique. One, there is a thought behind how we will generate performance. I tried to explain why and how we stick to it in a very disciplined manner. So if you look at the name of our alternate products, founders, value migration, mid to mega, etc., you find the portfolio true to the concept. So this is how we say money is being made. This is how we invest. So there is probably a higher predictability of performance. Then we have once again an industry first to our mind product where we mix listed with unlisted in a Cat 3 AF. So a very premium product. We bring the best of the house to the investors. The house has strength in private equity, institutional, iBanking, etc., etc. Leveraging all of the strength of the house, we try and have a good outcome for an investor. So a very strong focus is alternates, and then to have newer capabilities. So we already have a decent quant capability. One of the few houses in the country which has it. We are scaling it up. There are a few funds on the alternate side which are quant based. There are a few funds On the active side, let's speak about our active momentum fund. Again, one of the first active momentum funds in the industry, which is supported by our own research. So we want to scale that up, and ultimately, with in time, maybe bring newer strategies like long short, etc., on the SIF platform that SEBI has permitted. But
Right.
in time, everything that the house does is after a proof of concept has been established, and then bring it to the end investor rather than just bring it very quickly.
Absolutely. And in fact, lastly, let's talk about the Gen Z as well. You could say that. So, how should young investors interpret the message high quality, high growth? What mindset should they, bring into long-term investing?
No, so this is the fundamental thought. Over a long period of time, what makes you money is the ability of the business to keep compounding earnings. Earnings is loosely used word, it is cash flows. Okay?
Right.
Now, over the long term, you can do it by raising monies on the way, either debt or equity. Okay.
Sure.
But then, as we know and we have seen, periods like 2008, etc., happen. Lehman happened, financial markets closed, anybody who depended on outside monies simply got slaughtered very quickly.
Right.
Okay, so if you want to ensure longevity, then if you are financing your growth through internal accruals, the predictability of that growth, the sustainability of that growth is very high. Way higher than businesses who look at outside money for growth, which brings in a degree of uncertainty. So focusing on quality in combo with growth is hence very powerful. Now the purest sense is that the organic growth that you are able to generate is constrained by your return on invested capital. Okay, because if you want to grow faster than that, you will have to raise debt if it is a brief mismatch, or ultimately raise equity. Now that brings with it a degree of uncertainty. So to some extent, when you think of it, to some extent you can experiment, but to a large extent, the firm should be able to fund its own growth. There should be, so one is the ability of the firm to fund its own growth.
Right.
Now, outside money comes in, can propel growth higher, but there should be some ability. The other thing is longevity of growth. When we say QGLP, quantum of growth and longevity. See, in our markets, one period growth, if somebody delivers, is of very little use to most people because it comes and goes. If you look at it and invest in the next period has lower growth, you won't make money. So what you need is 2 dots for a manager to spot a trend and then position money. Okay, or 3 dots for the positioned money to work.
Right.
Okay, and for your clients, your distributors to notice that you are working, and 4 dots for the clients who come in after seeing 3 dots to have a happy outcome. Longevity is super important. Otherwise, paise nahi banenge.
Right.
So QGLP mein L is very, very, very important. You start with L, which are the spaces which will afford you longevity of growth, and then quantums, etc., can sort themselves out.
Well, one thing is clear that alpha is here to stay as well as growth investing. Well, insightful conversation as always, Prateek. Thank you so much for taking the time and walking us through your philosophy, strategy, and vision for future of investing in India. Well, to our listeners, remember, future-proof investing doesn't mean predicting the future. It means preparing for it with the right products, the right mindset, and the right discipline. Well, that's it for this episode of ET Markets webinar. I'm Shutajanand. Stay informed and stay invested. Mutual fund investments are subject to market risk. Read all scheme related documents carefully.